information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Welcome back onto the Research Talks podcast with Alan Green. Alan, another Friday, and it's the clocks have changed. The evenings are not as nice as they were. You're feeling tired, yawning earlier. Certainly I am in the day anyway. But this is a time where we look for the value, isn't it? We entertain ourselves with the red and green candles on the stock market.
We do. We gaze at screens in the half light, and that's where all these magical candles and charting and all these come to life. Because let's face it, we wouldn't want to look at them during the summer months. But it's a time of year. Of course, we're in the run up to Christmas, and we've had the big shock this week of the big interest rate rise, and frankly, the markets just shrugged it off. It was already factored in, obviously, and we know recession is coming. But I think, if anything, the forecast of a high interest rate, high of 4.5% by the Bank of England was better than everyone was hoping for. They forecast the longest recession in living memory, going to 2024. But I think if the interest rates go no higher than 4.5%. Some pundits were saying 6%. If it stays down, it stays at a higher 4.5%, then I think we'll have done pretty well. And certainly the market reaction has been very positive. Obviously the pound crashed, so a lot of the dollar earners making up the FTSE 100 have propelled the FTSE higher. But I think overall, it's we've now got a bit of certainty and a bit of stability.
Indeed, yeah. So we're going to be talking today about a new company, Cizzle Biotechnology. I did interview them for the first time just earlier in the week. They are not so long having IPO, just over a year ago, but looks very interesting what they're working on there. And even though they're new to the market, they are certainly not new to the sector, that they are developing their treatment for, or I should say their diagnostic test for, which you will tell us all about. And then FDR, of course, First Development Resources. So, Cizzle Biotech to start with, then give us your take.
Cizzle Biotech. Okay, so this is a London-listed company that came to market, as you rightly said, Mark, just over a year ago. And of course, we've spoken about many companies that are spun out of universities and commercialized from or university IP or lab IP is then commercialized. Many companies doing that, and Cizzle Biotech is one such company. So it's the company is a cancer diagnostic spin-out from York University, and the asset was initially funded by Yorkshire Cancer Research and several seed funds, plus also the company management. And of course, you've interviewed them this week, Mark. You've got the exec chairman, Dr. Alan Sims, who's a senior executive in the life science and technology industry, over 30 years experience working with companies, bringing them to market and overseeing their development. And then, of course, the founder and non-exec on the board, Professor Dawn Coverley, who herself is a cell biologist, 20 years experience. She initially established a research group in 2002, and this was supported by the Lister Institute at York University. And from there, the Cizzle Biotech biomarker technology has been developed. Also on the board, we have Finance Director Nigel Lee. He is a Director of CFO Solutions and many years experience in IT and software. And then John Treacy, who's also a non-exec director, has a corporate finance background. So you've got a very strong board there that bring a lot of strengths in the different fields together. So the initial investment went into developing a prototype blood test, and from that, Cizzle developed a patented core technology, which was developed and also developed a laboratory test alongside that to validate a biomarker to detect lung cancer. And of course, cancer is a traumatic experience for anyone, and with the existing therapies, scans, radiotherapy, all the rest of it, it's a lot of it's highly invasive and it's traumatic for the patient. So the difference here is that using this biomarker, it's compatible with use in hospitals, and of course, the difference is compared to existing forms of detection. It's an easy way to basically extract patient blood, and from that the test or the CIZ1B biomarker does its stuff and can identify these cells. So the actual biomarker itself is underpinned by some 15 years of research. As I said, as I said earlier, it was funded by Yorkshire Cancer Research and several seed funds. And this research has proved that the CIZ1B biomarker is or the CIZ1 is part of a nuclear structure in the evolution of human beings that controls gene expression. And the C21B is produced by lung cancer cells, and that in itself is exploited. That technology is exploited and can detect lung cancer in blood. The other issue with conventional tests, of course, with CT scanning, there are lots of false positives. In fact, false positive rates are up to 90%. And of course, this alone costs an awful lot of money, a lot of unnecessary costs. It is invasive for the patient, and it causes patient trauma, which of course is most undesirable. So in that regard, CIZ1B actually addresses a clear unmet clinical need. So of course the technology is being evolved by the team. Several developments this year of note. If we look at the share price at the moment, the shares are currently trading at 1.67p. So the asset and the company currently are worth just 5.5 million. Shares are traded as high as 4.7p just after IPO, but along with the battering the market has taken this year, I don't think the shares are fared too badly, considering they've just come off year lows of 1.3p. And of course, in September 21st, the company raised a further 500,000 at 1.5p, and has the option to raise a further 500,000 fixed at 1.8p. So right there, you've got floors in terms of valuation, considering the progress that the company's made so far this year. So in June this year, the company, following a joint venture agreement with a company called Core Paths to develop Cizzle Biotech's profile and to develop the CIZ1B test in the US, the company appointed Benker Group to market and promote Cizzle Biotechnology across the USA. And the board said this was strategically important, given that in the US there's a very high prevalence of lung cancer. That there are sort of health issues, I think, across the states which are more prevalent than perhaps here in the UK. Indeed, it's the opportunity for Benker Group to work with Cizzle Biotech. It's a perfect fit with their mission to bring innovative and less invasive technology to market. The company also has an interest in, and we mentioned this when we spoke about Biotechnology recently, Mark. We mentioned one of their investments with St. George's Street Capital. A test AZD1656, which is a test to identify cancers, and of course COVID. This was identified by Cizzle Biotech as a strategically important opportunity, and as such, Cizzle now have a 5% uncapped economic interest in AZD1656, which means that they get 5%, and overall they get royalties of up to 5 million. For this, they paid 1.8 million. But it was paid in the form of shares. So of course, those shares are already in issue, and they've now potentially got exposure to this revenue. this revenue from AZD 1656 going forward. So we're going to hear more about this going forward, of course. But the key development in August was the fact that the test was featured in the Lancet publication, and of course that's the Lancet publication is globally recognised as the place to be if you have a medical development, and indeed the fact that it's now been benchmarked in that publication should see further progress from with AZD 1656 going forward. So here we are now that the company is fully funded. We've got the developments in the US going forward, and I think this little biotech company at 5.5 million has a very bright future indeed. And I think there is a real unmet need to develop clinical technologies like this that are less invasive, less traumatic for patients, particularly when they're having to battle with diseases like lung cancer. So I think this is certainly one to probably at this point it's the sort of company that you could buy these shares, tuck them away, because of course the progress to get to get a treatment like this to market does take time. So, but I think at these sort of levels, with a 5.5 million market cap, the company looks very well placed.
It's always exciting, isn't it, when we hear about these developments in cancer, either treatment or detection, because of course everyone knows someone who has been affected by cancer at some point in their life. Really, it's and it seems to be only getting more and more, whether we're just detecting more or people are living longer, or who knows, the radio waves in the air, whatever it could be. But it's not. It's here, and everyone is. A lot of people are affected by it. So to hear of a simple test that could indeed eliminate people who have something that looks like it could be cancerous, or indeed detect it early on. As we all know, early detection is the key to survival rates in cancer, is fantastic. And having spoken to the CEO, Alan, only earlier this week, I was very intrigued as to what the company's doing, and quite impressed, certainly finding out that this, as you mentioned, just came out of research from the University of York over 15 years ago.
Yeah.
So it's not brand new. It's been in the works for a long time, and coming to market to raise the money to take them to commercialization. It won't happen overnight, but it'll accelerate that process of getting it through. They already partnered with a company in the US, a company in China, and they'll be looking to go down the approval route in the near future. So it's seemingly come sort of from nowhere, but it also hasn't as well. It's just been not in the public eye. So I think
that's the thing. It gives an idea of how long these specific medical technologies take to develop. It's many years of research, and that's why, of course, really the discovery of the vaccine for COVID in such a short space of time was nothing short of miraculous. But when you're a small research company and you've only got so much resource at your disposal, that it often takes that sort of time to develop. Just one point I'd like to make, actually. I mentioned AZD 1656. That's, of course, the Arcadia clinical trial. And I erroneously said treatment for cancer. It's not a treatment for cancer. AZD 1656 is a treatment for people with diabetes hospitalized with COVID-19, and it's also going to be used for other diseases, including inflammatory, pulmonary, and cardiovascular diseases.
Okay. Well, thank you for correcting that, Alan. Okay, well, thank you for the case there for Cizzle Biotechnology. So FDR, a company that is not yet listed, but will be coming to a market near you soon.
It will be coming indeed to a market near us soon. This is a very exciting company, and I think we were talking beforehand, Mark, weren't we, about Power Metal and its portfolio of assets, and of course throughout its evolution this year, the company Power Metal has spun out several projects, but of course with the difficult markets over the summer, it was decided to put a couple of the asset spin outs on hold. But now, given the relative stability in the markets over the past few weeks, it's been decided to reactivate that. Of course, we spoke about gold metal resources, and I think the most successful IPO this year has been, of course, the IPO of First Class Metals, in which Power Metal has a significant stake, and of course they came to market with a realistic valuation, and also with what the company referred to at the time as an avalanche of news flow, and I think that's really it's really shown companies planning to come to market how you execute that, and also how you need to develop the assets shortly after coming to market to ensure that that you have the right focus, and of course shareholders are getting the value that they hope to acquire from it. And First Class Metals have really blazed a trail in that regard, and I think FDR, First Development Resources, looks set to do the same. They have a package of assets in Australia, in the Paterson province in Western Australia, and they're targeting metals along the highly prospective gold and copper belt in that region. It's an emerging hub, as we know. It's home to long established operations such as the Telfer mine and the Nifty mine, and of course, most recently, we've had the Greatland Gold Haverian discovery there, and Rio Tinto's Winu project. So it's an area that's absolutely buzzing with activity and projects. And the FDR tenements there are they're on this belt, but they're to the northwest of the other assets. And the company, of course, the chief executive there is Tristan Potters, who's been in the industry for many years. He's well known on the IR and PR circuit in London. A very experienced chief executive in the sector, and he, along with his team, including Jamie Tosh and others, have really driven awareness of the asset base in Australia, and done some great and innovative marketing in order to get that message back to investors here in the UK. So the primary asset within the group is the Wallal asset. This is a large land package, so there are plenty of maps. If you look at if you go to the FDR website, you'll see an abundance of maps, and you'll get an idea of just how big the FDR's Wallal asset is. And what's important here, that there are no issues with part ownership or earnings or options or anything like that. All of the assets are 100% owned. So this large land package, they've completed a desktop study, and they've identified 3 large magnetic bullseyes. And what's interesting is that there are some comparisons. There was a broker note published by SI Capital yesterday, Charlie Stevenson, who's done a great job in putting this together, and there are comparisons with the other finds out there. And indeed, Greatland Gold's Haverian magnetic bullseye was 1.5 kilometers by 1 kilometer. But there are a series of anomalies identified through the work in Wallal, and indeed the most westerly magnetic bullseye in the Wallal region is 5 kilometers by 5 kilometers. So it really does dwarf Haverian. And of course, if the discovery there is anything like the discovery made at Haverian, then this could be, one of the biggest finds for sort of gold and copper in recent history. So hugely exciting. The company announced recently, of course, that it received drill clearance, so a heritage clearance survey at Wallal on behalf of the indigenous people there, confirmed that the site establishment works for drilling can go ahead, and a team was mobilized. This was, of course, announced at the end of October. A team was mobilized to this eastern magnetic bullseye identified during the desktop review, and they've set up a phase 1 diamond core drilling program to test this anomaly. And this anomaly is 2.5 kilometers by 2.5 kilometers wide, and is still much bigger than the Haverian anomaly. So really exciting times. And Tristan said in that announcement that with the final approval to proceed with the core drilling program, on receipt of the final reports, the earthworks contractor is going to prepare the site drilling partner DDH1 will go in there and start the drilling work, and that will take place just after the planned UK listing. So we're very much on the runway now to get the company away, and of course Walal is going to be the key focus. But it's FDR isn't a one-trick pony by any stretch of the imagination. We then get to the other two assets, which are also in this area, and those are the Ripon Hill and Braeside West assets. And again, multiple drill targets have been identified, or multiple targets have been identified for further investigation there. And again, located close to no mineral systems, which are prospective for gold and base metals. There's again plenty of news flow to come here. There are sort of many models that have been put together to closer examine and give a better idea of the potential sort of within those projects. So we'll no doubt have an update from Tristan and the team probably prior to the listing on those assets. So the final asset within the package is we then move to the Northern Territory, and this is of course the Celta project, and this is prospective for uranium. It's a large asset, again about 1,600 square kilometers, targeting rare earth elements as well, and also potential. It's a potential site also for lithium. This again is the region that the Celta project is located in. It's on the Stuart Highway that links Darwin to Alice Springs, so close to power infrastructure. They're able to get in there, but also there's a lot of activity in the area. We've got IGO, we've got Megawatts, Prodigy Gold nearby, Arafura Resources, New Age Resources, much activity in the area already taking place. But Celta itself is still in the very early stages of exploration. So again, desktop studies, sampling campaigns to further identify initial drill targets, and I've no doubt that we'll have more news on this as promised by Tristan, probably just after the IPO. Also on this note from SI Capital is an interesting chart which just shows compared to the other projects in the area where FDR's assets are, and there's a development and evolutionary curve. And again, what, of course, as mining investors, what we're looking to do is to invest into explorers that then evolve into developers and ultimately producers. On this chart, we have FDR's assets at localized target generation. That's both the Ripon Hill and Celta. Walal is later in there. We're coming up to drilling for Walal. Of course, that's the first one. And then as we move up the evolutionary curve, we've got the Antipa Minyari Dome asset, which is resource drilling and scoping study. Winu, that's a Rio Tinto asset, is at the same level. Javierin, of course, the assets and the resource there, joint resources are well established. So Javierin's at PFS, moving to BFS stage. And then we have the Cyprium Nifty asset that's financed and developed, and then Newcrest's Telfer asset. So that really, I think, illustrates nicely the process of evolution that a mining explorer goes through when it comes to market. So in summary, I think FDR, as SI Capital said in their note, there's an opportunity here to gain exposure to an early stage explorer, but in an explorer that's based within the lowest jurisdiction, with numerous projects and established infrastructure in the area, all at target a generation stage. So I think, of course, with the other major players in the area, the major companies like Rio, like Newcrest, they all exist and evolve so identifying assets, of course, that they own themselves, but also working with junior companies who are developing other assets and then coming in. Of course, that's what happened with Greatland Gold and Javierin. Newcrest came in. Greatland Gold still holds 35% of the asset there, which is now, as I say, in PFS and BFS stage. And that's where we want to see FDR evolve to in the future. So it's a really, really exciting time. But I think what Paul, Tristan, and the team have done, they've minimized the risk associated with this, because the land package and the assets, A, they're 100% owned by FDR in the first place, and B, they are in an established area for exploration, close to and alongside lots of major names in the mining industry, which of course provides the perfect opportunity for JVs should the drilling work be successful and should the assets come out of the ground that we're all hoping for.
Excellent. Do we have any idea on the IPO time?
That hasn't been stated yet,
No.
but I think the fact that this note from SI Capital has went out yesterday, I think that's highly significant. So I think we can probably
starting to raise awareness of the company prior to the actual official offer.
Yeah, the wheels are starting to turn now, Mark. So I think we can reasonably expect to see this develop and come to market, possibly before Christmas. Who knows?
Oh. Well, we'll have to see, won't we? But it would be nice. I think speaking to Paul, things might change depending on market conditions. I think he kind of alluded to.
Yes.
So we wait and see. But it's good to get a heads up on these things. I think companies, as you said before, about First Class Metals, they're a very good example of how to IPO a company and literally hit the ground running and deliver good news flow. Just look at their share price performance.
Exactly that, but I think they've actually pushed the share price ahead in a difficult market. But it also means that they came to market with a reasonably priced valuation too. So that's something I think that Paul and Tristan and the team will be aware of, and I'm sure this will apply also to Oliver Friesen with Gold Metal Resources. They'll look to package and the assets, price them competitively, and then hit the ground running with a lot of news flow to give the value add and near-term value inflection points.
Indeed. Okay, well, thank you for sort of painting the picture there of FDR, and we'll just have to keep an eye on the space and what's happening as they approach to that IPO stage. But it's always good to have it in the back of your mind as we approach this, and then you can make your decision when the time comes. But thank you, Alan. So that's Cizzle Biotechnology we've spoken about there, and First Development Resources. So thank you very much. Wish you a pleasant weekend, and we'll speak in a week's time.
Thank you, Mark. Have a great weekend.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.